Welcome back. We are back with another episode. Ben is going to take us through some charts. Special guest Ben from Into the Cryptoverse is joining us. I would highly recommend you go follow his channel. Ben is highly talented. He is actually here to help people. He hasn't taken a bunch of paid ads. He's built his own brand and he's done incredibly well. And he's talking about just the facts and the charts, just like we do. Ben, it's phenomenal to have you. Please go follow Ben's channel. We'll have it linked in the description down below. And this will be a continuation from the previous video. If you didn't get to watch that, I would highly recommend you start there and then transition into this one. And we'll have potentially a discussion at the end of this video, so stay tuned for that. Ben, welcome in. Phenomenal to have you.
Yeah, thanks again for having me. And again, if you're not subscribed to Steve, I would encourage everyone to subscribe to Steve as well. He's got a lot of great videos, and he keeps the discussions based on the data rather than the emotions. So I want to do a follow-up to the last video because Steve and I, we were talking about this model and if we continue to emulate a prior cycle, where could it put us? Okay, the first thing to say is, well, 2013 was putting in new all-time highs, 6 months later, and it went parabolic 6 months later. We also recognize, though, that the time, the length of these, these points between these cycles are increasing, right? This first peak to the intermediate peak was 672 days, whereas this one was 1,211 days, and so this next leg could be a bit longer. We did a little bit of a dubious extrapolation based on these ratios and came to July of 2022. Now, what does that mean? It's easy to just say July 2022 and then just, pretend like we can take that to the bank, but I do think it's important to look at what that could mean in light of other models. It's always good to see, what does it look like on another model? So this chart is actually one of my favorite charts. And it's basically, it shows us the market cycle ROI of Bitcoin, cycle 1, 2, 3, and 4. Now, there is a little bit of bias or maybe subjectivity, because you could argue maybe that this is two separate cycles back in 2013 when there was like an 80% sell-off and then a continuation later that year. But if we assume that these are the three prior cycles to Bitcoin, we got blue, orange, and yellow. The two main things that we can say that so far have happened are that we had diminishing returns from the cycle bottom before the 1 to 2 year bear market started, and they took longer to reach their market cycle peak. So when we look at the current cycle, one of the things that made me uncomfortable for a long time was that we were ahead of schedule. I kept thinking hey, we're ahead of schedule right now. It's crazy that we're up in these areas because we're not only keeping pace with cycle 3, we're ahead of it. We're ahead of cycle 3. And when you think about market cap and the fact that the market cap of Bitcoin is so much higher than it was back then, the fact that we were able to keep pace with cycle 3 for so long was very extraordinary, in my opinion. It was just absolutely extraordinary that it was able to keep pace for so long. But we also have to recognize that, hey, and we said this a few months ago, is just because we're ahead of a cycle does not mean we will stay ahead of it for the duration of the entire market cycle. The case in point is looking at cycle 2. At one point, cycle 4 was ahead of cycle 2, but it had that 2019, brief bear market consolidation phase, whatever you want to call it, right, where we went to 14K and then we went back down to 38K before continuing on. But 38K or 3,800, when we went to 3,800 back in March of 2020, it was not the market cycle bottom. That was back in December of 2018. So my argument is, and back over here was, hey, we are ahead of schedule. I do not think we will keep pace with it. In order to keep pace with it, we need to go to a $300-something thousand Bitcoin within, say, the next 6 months. And it just seems highly unlikely that that was going to happen. And so that in my opinion, getting back below this curve is where we belong in the market cycle. I think we should be down here somewhere, and not necessarily, that doesn't necessarily mean we have to go down, but it means at the very least we need to go sideways for a while just to get below this curve, decisively below it. Because it could be easy to say, hey, we're below it now, but you also have to consider that, well, we had a pretty big pullback around this time during the last market cycle, and we were able to get back on track. We did not break the 20-week SMA or the 21-week EMA, so there were some differences there. We weren't knocking on the door of a potential death cross on the daily chart or anything like that. But my contention is the same, is that, hey, we were ahead of schedule over here in 2019 compared to the second cycle. We had a brief consolidation phase before trending back up. I sort of think we're in the same boat now. I think we're having this consolidation phase for a few months, and that then there's a chance we'll have another move later on. Now, we just mentioned that if you do some dubious extrapolation from this chart, it could put the next peak in the summer of 2022. Well, what would that look like over here? That's where the line would be, okay? That's approximately where it would put us in the summer of 2022, going out over 1,300 days. The first one went out just over 200 days. The second one went out maybe 750 days or so. The third one went out over 1,000 days, maybe like 1,050 days. It stands to reason that the next one could go out 1,300, 1,400, maybe 1,500 days. Maybe it does something like this, where this is not the market cycle top, but it doesn't mean we won't have a few bearish months before we get back on track. And then we'll still look at this cycle overall and say, well, we still had diminishing returns from one cycle to another, and we had lengthening cycles. If this is the market cycle peak, we discussed this in the last video. If this is the market cycle peak and we don't have another leg up within the next like say 12 to 18 months or so, then we would then say, well, it was diminishing returns, right? We could not dispute diminishing returns if this is the market cycle peak, because this went up here from the bottom. This is about a 700x, this is about a 500x, this is about over 100x. If this is the market cycle peak, you're looking at only a 20x. Okay, you're looking at only a 20x. So certainly possible. I think that, on my channel, when we've talked about diminishing returns and lengthening cycles for a long time, I think a lot of people have an easier time accepting diminishing returns. And I think it makes sense from a fundamental perspective why you would get diminishing returns from one market cycle to the other, because it takes exponentially more volume to move the market, because the market cap is that much higher. The lengthening cycle stuff is a little bit a tougher thing to accept. And I think that, hey, Steve, we're going to know within the next 1 to 2 years, we're going to know definitively, is this a thing? Like, are lengthening cycles a thing? Was it just a fluke that it happened for the first, for these? Was it just a fluke? Or is that the new trend, and that we will have a lengthened cycle that will take us past 2021? Now, the main criticism to this chart is, well, why not measure it from the halving, right? Why not measure it from the halving? A lot of people want to measure the ROI from the halving, so we're going to do that. But I also want to say that there could be some uncertainty here, even if it is a lengthened cycle. Saying July 2022 just because there's one ratio that said that certainly does not mean that it has to be exactly July 2022. If anything, I would say July 2022 would be like the early side of a lengthened cycle. Because if the cycle peaks in, say, January of 2022, then you could argue that's closer to a 4-year cycle than a lengthened cycle. So I would say that, July getting into late Q2 or maybe early Q3, that would be like on the early end of a lengthened cycle. But I think a lot of people want to know, well, what does it look like when you measure it from the halving? Because, the halving is a pretty big event for Bitcoin, where the rewards to the miners are cut in half. And so when you look at it like this, hey, we're actually on track with the last cycle still. It was a very different course that we took to get to where we currently are. I mean, instead of just slowly going up like we did last cycle, we went up relatively quickly, and now we've come back down to it. What's interesting is how the path to where we are has completely changed the sentiment, If instead of going up and coming back down, if we had just slowly gone up, a lot more people would be a lot more bullish right now. But because of the path has been completely different, it completely changes the sentiment. And that's why sticking to the data over what the emotions might be, I think is relatively important. With that said, I do expect. And by the way, this would be approximately July 2022 on this chart, so it would look something like that potentially if we were to put in a lengthened cycle with diminishing returns. Still seems somewhat plausible. I don't think we'll be able to keep pace with the current cycle. If you want to track whether we can keep pace with it, we recognize that what the price of Bitcoin was around 8K, maybe a little bit above 8K at the last halving. The last market cycle, as measured from the halving rather than the cycle bottom, put in about a 30x. Note that this is a logarithmic scale, so this is 10x, 20x, and 30x. So a 30x from the halving would put the price of Bitcoin at approximately $250,000 if it were able to go to the same ROI as measured from the halving as the last cycle did. So my argument here is that we probably will not go to those levels this cycle, and that it will certainly diminish. I think it will certainly diminish. The only main question I think is, as you pointed out in the last video, is that the cycle top, right? Is that the cycle top where it already is diminished and we don't get a lengthened cycle? And so I think we're just going to have to wait a few months and see, can Bitcoin resume bullishness later on, or are we heading down for a while?
Yeah, I think this lengthening cycle, diminishing returns, it probably ruffles a few feathers, but it's all theories that go against the grain, go against the herd, do that. First they laugh at you, and then they copy you, and then they praise you. So it's interesting. I'm excited to see how this is going to play out. When I was on your channel a bunch of months ago, we gave a theory about a new deca cycle had just started, and because everyone's like, well, how could this cycle grow at a faster clip than the previous cycle?
Mm-hmm.
In that theory, the previous cycle was wave 5, which always moves at a slower pace, and this, we just finished an ABC correction, and then we just had wave 1 up to 65K, and wave 1 is pretty strong relative to wave 5. And this could potentially be wave 2, this blood in the streets that we have now.
Mm-hmm.
And one thing that you may like, Ben, is if this is wave 2, then wave 3 comes next, and wave 3 is generally the longest wave and never the shortest wave. So it'll be interesting to see how this plays out. Specifically, the chart with when we're the purple line, when we grew at a faster clip than the yellow one,
right?
That's going to be interesting to see how those interact with each other as the next 3 to 6 months unfold. What would be your take on how this plays out, kind of the rest of the 2021? Are you in the camp of like, hey, we're going to see some consolidation for the rest of 2021 and then move into 2022 where the steam starts picking up? Or are we going to continue down for 2021? What's your take on just generally 2021?
I think it's unlikely that we put in new all-time highs anytime soon. I think that we're probably in some type of consolidation phase. If it is, if it is sort of what you discussed with that first impulsive move, back in, and it says somewhere like 2011, maybe then you have another move a couple years later or something similar to 2013. But I think that for the rest of the year, we've already had 5 months where we were pretty bullish of 2021. Okay, we already had 5 months. And if you go back into 2020, the last 9 months of 2020 were relatively bullish as well. After the drop back in March, the entire cryptocurrency asset class was basically just moving up with some sideways movements in between. So I think it's more likely than not. I think following momentum is probably one of the best things. When things are moving up, they're more likely to keep moving up. And one of the things we know is like with stocks and whatnot, like a stock that's moving up is more likely to keep moving up than for a stock not moving up to start moving up. It's just more likely that momentum continues to basically, the trend is your friend, right? Everyone knows that saying, the trend is your friend. So I think that I think right now, I don't think we are in a downtrend, right? We are in a downtrend right now, and I think that we need to find a base to that downtrend at some point this year to consolidate around that base for a few months, to go up above the 20-week SMA and then hold it as support. And I don't necessarily think that all of those things have to happen in 2021, but I think that some of those things, like I think we're probably going to find, some type of bottom. I think we're probably going to start trending sideways at some point. Right now, we've just been going down for a few weeks. So I think we just need a few more months to see, okay, can we find a bottom? Can we start building support out around that level? And if we can build support out, and whether that's 30K, whether we already hit the bottom or not, wherever that bottom is, if we can build support there for a few months, I think it will slowly build confidence back to the market that, hey, we're going to start getting back on track to a six-figure Bitcoin, but that before we were just moving up too quickly and going up to 64K that quickly without going back and testing the 20-week SMA or the 21-week EMA was not really healthy for the market. And now we're kind of paying the price for it, right? Now the whole market is sort of paying the price for the fact that we did go up so quickly and we didn't have any systematic tests of some, key areas on the chart. So yeah, to just summarize, I think that we are in for, certainly I think we're going to have some bearish months in 2021. But I don't think the entire market cycle is over. I think that we will trend up later on, but I don't think the peak will happen in 2021.
I think that's the key, the peak.
Yeah.
The peak. I think that's where you stand on the other side of the fence, and I applaud you for that. It's always good to be on the other side of the fence. So, the reality is nobody on planet Earth knows what Bitcoin's going to do. As much as people want to say, I know exactly what Bitcoin's going to do, nobody knows. And I think an even more interesting discussion is, and somebody asked me this, Ben, I'll ask you, do you think Bitcoin will be around your entire lifetime, given the fact that most currencies live for around 30-ish years?
It's always a tough question because you don't really know what types of technology will be developed, right? Like if better forms of technology will be developed in 20 years that we can't even imagine yet, I think it will be around. I don't think it's going to go through these boom and bust cycles like every few years where, and obviously a lot of that mentality is built around the halving. I don't think that every single halving for the next 100 years that Bitcoin's going to go up, a crazy amount, because I think the market would adapt. I think the market would adapt to that and realize what's happening and not just, everyone buys Bitcoin right before the halving, rides it up, 10x, 20x or whatever, and then we all rinse and repeat it every 4 years. I don't think that's going to happen. But I do think that over the next several years, maybe the next decade or two, we will find what whatever the value of Bitcoin will most likely stay at for a while, rather than having these crazy boom and bust cycles. We know that volatility is diminishing, right? We know that volatility is diminishing on like an annual basis. We say like the difference between the max and the min. So I think that it'll be around. I think that it'll be around my entire life. I don't think it will be around in the same sense of like, hey, every halving we're all going to band together and see crazy returns. Like I just don't think that's going to happen every 4 years for the next 100 years until these rewards have all been paid out. So that's sort of my stance on that. So I just wanted to clarify what I mean by it being around. I think it'll be around, but I don't think we're going to have these crazy boom and bust cycles every few years.
Awesome. Well, we appreciate you, Ben. Thank you for coming on the show. Everybody, go follow Ben. We're going to have the link down below, and we'll see you on the next episode. We should be on Ben's channel in a handful of days. If you want to check that out, stay tuned for that as well. Thank you for everybody's support, and we'll see you on the next episode.